Hello, in this video we shall see how to account for vendor invoice in an ERP. Before we go to see the how it is accounted in an ERP, let us first understand what is the journal entry in the normal course of business. Whenever a supplier provides any services to the company, we normally book it as an expense. In case the provision have been made in the previous month, we knock off against the provision, we account for our VAT, and then the total amount we credit to the vendor account. In ERP, we do the same for the expense. We book the cost of the services or the material as an expense directly into the GL, obviously via accounting code, and then we select the VAT item sales tax group. So what is an item sales tax group and how does it function? We'll see it in detail. Actually, we don't actually select the VAT code, ledger code. We select the item sales tax group, and then the vendor code. The vendor code is basically a ledger of the vendor wherein all the transactions related to vendors are being done, and this vendor code is linked with the vendor group, and vendor group is linked with the GL where it is linked with the trial balance or the financial numbers. So let's go back to VAT item sales tax group. VAT items sales tax group, we can take the credit of the VAT in two types. It actually depends upon the local rules or regulation. The one can be on the accrual method. The accrual method is we receive an invoice, we book in the ERP, and we take the credit, and in the next liability that we need to settle for the VAT, we can adjust it. So there is no condition that if you make the payment then only you can take the credit. So that is a normal which actually happens. This is called the accrual method. And the second one is a conditional. Conditional means there is a condition attached with this that when you will make a payment and then only the credit will be available. Let's see for an example, like we receive an invoice on the 1st of April. We book them in the system. So the VAT amount of 100, this VAT is deductible from the VAT output against the liability for the month of April. So there is no condition attached that whenever you'll make a payment, then it will be available for credit. However, if there is condition attached, so this condition is based on the laws of the country, then this credit of 100 is available only when it is paid. So you will receive the invoice in the month of April, we book them, but the credit is allowed to be settled against the output only when it's paid. In this case it is May month. So I think you are clear with the system, how does it work. So let us take an example how to book them, how to book a transaction or a vendor invoice into an ERP. The example we will take for the vendor V001, invoice number, invoice date, amount excluding tax, VAT, total amount, description, and currency. So let us see how we can account this into an ERP. So let us go to accounts payable module. Then we go to invoice journal. So the path is we go to accounts payable under the module section, and then under the invoices we go to the invoice journal. Then you have to click over new. This will open a journal batch for you. From a drop down list you have to select the voucher type, the document that you are accounting. Either it's a credit note, debit note, or it's a fixed asset purchase, or it's a vendor purchase invoice. So we are accounting the vendor invoice. Once you select the voucher type, click on lines. Okay, you can see the layout. So the first thing that we need to capture is a date. So this date is editable. You can put the date based on the transaction. Here you need to select the code of the vendor. So that is a drop down list available. If you click over here, You can see the vendor codes, so you can select the one which is applicable. Select the invoice date. Invoice date and accounting date can be different, so let's take 23. Then the invoice number, if we go back to our example, our invoice number was VEN-001, so we'll cut and copy paste over here. Then it asks for the description, so we'll mention the description, and then we'll mention the amount. So the amount should be exclusive of tax, so let us take 100k. You can select the currency from a drop down list for the transaction, either it is USD or it is your local currency. So since we have put the amount in the credit, so the offset account will be debit. So there is no concept as such like what is debit, what is credit. The offset account will be opposite to the one that you selected previously. If I put the amount here debit, the offset account will be credit. If I put the vendor account credit, the offset account becomes debit. So let us select the GL. So vehicle rental, we have to mention the dimensions. You can capture the dimension to the level of informations available with you. I would urge you to fill maximum of information because it may help you while analyzing the data. Okay, once everything is selected, as we saw in the earlier, that we need to select the item sales tax group. So the item sales tax group, so you can see there are 3 item sales tax group. The 2 are for the customer and 1 is for the vendor. As we see that in the country that we are posting this transaction, they have conditional VAT. So we saw what is a normal VAT and a conditional VAT. So we apply the conditional VAT over here. Then we fill the financial dimensions for the vendor account. That's it. When the information is complete, you can validate to ensure that there is no error. Once you are through with the validation, you can proceed to post the transaction. So our transaction is posted. Let us also see another scenario where we have multiple line in an invoice. So in the given case that we saw, there was only one line item. So let us take an example that we have 2 line of item in an invoice. From a drop down list, I'll select the voucher type. So it's a vendor invoice. Click over the lines. From a drop down list, I'll select the vendor code. So in our case it was V-001. You can select the invoice date. As I told you before, it can be different. Invoice number 001, description test. So suppose it is 50,000. So we have to add 2 lines. So let us take add new. You can see the voucher number remains the same. If the voucher number changes, so it is not a part of same voucher. It is considered as different. So in that case, it will be a problem. So before we were directly accounting in the vendor code over here. So now the debit account will be a ledger. So from here you can select the ledger. You can select the invoice date. Okay, and then you can mention, suppose it is 25,000 for two vehicles. You can still see the same, the number series is continuing. So that means all the lines that we are posting are part of the same voucher. So again, we need to debit the expense account. So we'll select the ledger. $626,100 CM. Let's say this is for ENC, and then we fix this. We can select the list from a drop down. Vendor 1. So previous example, we were not using a debit credit format where we were posting into a one straight line, because we had only one line in an invoice, but here we have multiple lines. So we can use the debit credit format in this fashion. You can see the currency taken by system automatically USD. You can change. So now the local currency is updated. So the VAT amount, so you have to apply the VAT. VAT remains the same as we saw previously. You can apply the VAT over here to each line. So dimension for this two type is completed, and for this one is still pending. So let us complete that. So once you are through with all the information that you need to capture, you can post the transaction. So you can see our transaction is posted. So in this video we saw how the general entry is done in an ERP, what is an item sales tax group, what is a normal sales tax group, what is a conditional sales tax group, which type of sales tax groups to be applied. Then we saw how to account for an invoice for one line in an invoice, and how to account for multiple line in an invoice. Okay, I hope this is clear, and in case you face any difficulties, you can please contact me. Thank you.